Not sure how long this is going to take to go through, so we'll get to them as we can. All right, for those of you who don't know me, I'm the startup coach. I'm the founder of TorontoStarts. We're now one of the largest startup communities here in Canada with over 25,000 active entrepreneurs. We used to do in-person events and training and all that kind of stuff, but now we've moved obviously all to online. I've worked with thousands of startups. I've helped startups raise over $60 million in funding. The number's more now. I have to go back and take a look. And I've been running TorontoStarts for over 6 years. A lot of the startups during our first year have gone out and exited and done some really interesting things like fixed mechanics, like healthy pets. I know Socialite Vodka is still going strong, and Hedgehog Umbrella is still going strong, and a bunch of those startups that were in our industry, our community, and a bunch of others you may or may not know. But that just gives you an idea of who I am. I work with startups all day long. I run stuff like this. I work with different mentors and people in the community to bring products and services, and not just product service, but information to help startups grow. We have a Slack group. Message me. I sent you all my email. If you have questions, email me. I'll try and connect you with whoever I can. Connect with me on LinkedIn. You know, I'm a connector. You may not want to talk to me, but maybe you'll talk to somebody I know or someone else. That's great. If you want to do that, feel free. I think Investor Speed Dating is May 14th this month, and we have Maple Leaf Angels in, just for those of you record. So why are we here? What are we going to do today? Well, we're going to introduce the funding metrics scorecard I just sent out to everybody, show you how to use it to get your funding score, and then basically you'll have a really good idea of what you need to improve to get a 100K plus investment. And I'm talking about 100K plus investment because some of these things, as you get into it, if you're just looking for 25 or 30K, you might not be ready. But if you start planning and using this sheet and focusing on, you know, the end goal of eventually getting investors and exiting and stuff, this is a really good guideline. So, you know, what questions are we going to answer? We're going to try and answer for you. You may be here because how do I raise funding for my startup? How do I get the right investor support? Can I have experts help me build my roadmap to get to the next level? How can I focus my efforts and what am I doing wrong? So we're going to talk about a bunch of these things today and hopefully help you answer any of these questions and whatnot you may have. Oops, let me go back. So we're all painfully aware of what a machine like this does. It's tracking the vital signs in your body. What parts are operating well, which ones are not performing well and need attention. Devices like these and others your doctors use to determine what you should be looking out for and steps to improve. You know, this particular machine is measuring your heart rate, you know how this vital metric inside your body is performing. And, you know, maybe you need to run more, maybe you need to change your diet, maybe you need to, but we go to our doctor, has the right instruments and tests to test those things and figure those things out. Oops, let me go back. Sorry, I'm running two presentations here just because show notes don't quite work out for me. So let's talk about how I chose these metrics. Just like medical devices help determine your body's vital metrics, the funding metrics scorecard is here to tell you how healthy and viable your business is. You know, I didn't pull all these out of the air. I've worked with thousands of startups, as I mentioned at the beginning. I work with a bunch of venture capitalists, with angel investors groups. I've run a bunch of pitch competitions. I've helped startups get funded. When I'm talking to venture capitalists and angel investors, I've interviewed them for my podcast, among other things about getting them speakered on panelists and, always asking them questions of finding out what it actually takes to write a check. Not say, hey, that's a good job or that's a good pitch, or maybe I'll tell my friends about you, or maybe I'll refer to somebody, but what is it they're specifically looking for to get them over the line to pull out their pen and write a check? So even if you're not looking for investors right now, using this tool a tool like this will help you look at your business through the lens of a third-party objective investor and will help you focus on the right things in your business. So most people think you only become viable after lots and lots of trial and error. And that, there's no roadmap to doing it, to getting funding. You just got to keep knocking on doors and trying different pitches and talking to different people. and that it's a guessing game, or particularly with fundraising, that some believe it's all a big mystery. No one really knows what's going on, and you just have to guess your way through it. Well, I don't really agree with that at all. Many people also believe things like, I need to be an experienced founder to build a startup and raise money, or I need a warm intro to an investor, or I need to be in some sort of insider group. Now, warm intros help, but these things are not prerequisites to building a successful startup and raising capital. So the unfortunate part is when you start believing these things, you start to lose focus with everything pulling at your attention as a startup founder. It becomes hard to know what are your priorities right now. And based on the goal of building a viable startup, which ones you should be focusing on. So which ones are going to help you close a funding round. Starting with the end in mind, studies have shown that those who practice have far more likelihood of success. Like taking a driving course and a fake driving test. That tests a person, you are many exponentially times greater, more likely to pass your driver's exam. So consider this scorecard, your fake exam that prepares you to get you to the next test for funding. So if your goal is to build an investor-ready startup, using the funding metric scorecard will help you. So consider it your test exam. So let's get into it. That's just kind of the high-level stuff. We're only going to talk a little let's get into what each of the 10 key metrics are. I'll send out the scorecard after. You don't have it, but you should have it already. I'll be talking at a very high level about the 10 key metrics. And each of these metrics has several elements. And we're going to talk briefly about each of them, but very briefly because we've only got some time. I want to leave some time for just some basic questions at the end. For each of these elements, you give yourself a score out of 5. If you have the spreadsheet up, you can take a look at it. You can see each of these pieces. You get a score out of 5. And not only that, but in each of the areas, like the first one we're going to talk about here, which is, I got my problem, opportunity, market, value proposition. For each of the 10 areas, you're going to get a score out of 100 as well. So keep those in mind because it helps you determine which areas are weak and which areas are strong and where you need to focus. So for each of these elements we're going to talk about, and then a scorecard, give your score out of 5. And over time, you should get comfortable with giving yourself a score because maybe you're uncomfortable today. You don't know. You just throw something in there. That'll give you an idea. But over time, you'll get a better idea. Update this frequently. Every couple of weeks, you should be updating the scorecard to see if you're moving forward, if you're actively looking for funding. When you hit about 215 out of 250 or higher, you're probably ready and are going to likely to succeed. So that should be the goal of a total of 215 out of a total of 250 possible. Then you are looking very likely at getting funded. So let's get to the first section. The problem, opportunity, market, value, and value proposition. So what is your problem? What is the problem you are solving? I talk to a lot of startups, and I always ask, what is the problem you're solving? Because, sometimes it's not clear. And more often than not, founders are not able to clearly and succinctly describe the problem they are solving. So in a simple 2 to 3 sentence way, can you describe the problem you're solving? Remember to give yourself a score out of 5 for each of the metrics and to start thinking like the scorecard. So how clearly and succinctly can you describe the problem you're solving? How easily is it understood by those who have never heard of it before? And if you leave the room, and this is the key thing, can they clearly describe it to someone else without you there? So, what's your rating? Can you give yourself a score out of 5? Describe the problem you're solving in 1 to 3 sentences. There's a lot of talk in the industry about painkillers versus vitamins. You've probably heard this before, but I'll just reiterate. The difference between a painkiller and a vitamin. Vitamins are nice to have. They have potential value to help your body in all sorts of ways. But, you won't leave the office at 10 a.m. To go downstairs and get a vitamin you missed to take this morning. But you will for a Tylenol for that splitting headache or that back pain you have. So are you solving a problem? The closer you are to a painkiller, something that is needed and critical, the better. If you are nice to have and the customer thinks of you as a vitamin, then give yourself a 0 or a 1 out of 5. If your customers are saying this is a painkiller for the problem they are solving, then give yourself a 5. So is your solution a painkiller? Is it a must-have? Or is it a remedy, a nice-to-have like a vitamin? Oh, it's slightly different too. Oh, there you go. Do you scale? Is your business scalable operationally and across geographies, or is it just local? I say this all the time, and you hear this from other people, investors, especially angel and VCs, they're looking for how to turn the 1 bag of money they're giving you into 10 bags of money. And it's not rhetoric. It's just a fact. And it's just easy to symbolize that way because, 8 out of 10 of their investments fail. So they need those last 2 to make up for the rest of it. So they have to swing for the fences. So if you're not in a big enough market or not, not being going to go across geographies or whatnot, you might be looking at the wrong type of investor. So give yourself scale. Mark out of 5. Do you scale? Do you operational cross geographies? Are you ready to go? Or are you going to be hyper local and only stay somewhere local like Toronto? I mentioned this briefly earlier. Size matters. Is your market size 1 billion plus and still growing? Now, again, what we're talking about today and what the scorecard is for, if you're trying to raise more than $100,000, you can get away with some smaller stuff and not everything if you're just trying to raise 25 or 50K. But if you're trying to raise more than 100 grand, size matters. If your market size is only 100 million and you can only capture 10 million of that in revenue, and that's your maximum return, no one's going to invest $100,000 in you because they're not going to get their return on investment. So you have to kind of look at what your market size is. Customer research. Have you reached out to at least 100 plus ideal customers with some combination of recorded phone calls, surveys, to validate your value prop? How have you sales are better, but how have you validated your value prop? How do you know? They're not configured. I'm sorry, Mohammed. I put this was an Excel spreadsheet, and I just copied up to Google. So I will fix that, and I'll send out the Excel spreadsheet as well, but I'll have to do that after. I apologize that they're not adding up. Thanks for letting me know. So your totals aren't adding up in the spreadsheet. I apologize. So investors need to know you've done your customer research. Market validation. Have you already received compelling market validation in the form of revenue, customer waiting lists, signed pilots, letters of intent, or similar? Like, what market validation have you done? So that's the metric 1 when we're talking about problem, opportunity, market, value proposition. But, we live in the real world, and over a year ago, we had this little nasty thing come along called COVID. And so the next metric category is COVID. I'm going to do this 1B because this might be taken out post-COVID later. But every investor I talk to wants to know, what have you done or are doing during COVID? If you did nothing and are waiting for it to be over, they're generally not interested. If you don't have a good COVID story, they're not interested. They're going to walk away. So, and if you did nothing during COVID, give yourself a 0 for this section and the pieces we're talking about here. But startup investing is already a high risk. COVID makes it even riskier for investors. So do you have a COVID-ready narrative? So when we speak about COVID, Are you able to say my startup has gained traction in the last 90 days? Are you growing during COVID? Do you have a business model that has generated revenue? We talked about that in the last 90 days. Have you received new contracts? Do you have new advisors? Traction is always not necessarily about customers, but sometimes it's about the other stuff you're doing behind. You got new advisors. You're raising money. You're making new connections. You got a research grant. You're doing this. There's other things. You're building your product. So show them what you've been doing and that you're growing during COVID, and score yourself out of 5 on this. Cost cutting. How have you cut costs during COVID? How have you lowered your burn rate? Have you had those difficult conversations with vendors, suppliers, landlords to renegotiate your deals to keep as much cash on hand as possible? Are you being responsible with your runway? You're asking for money. They want to know how you're handling money now. You've got a crisis. Your clients may have disappeared. What are you doing? Don't underestimate the power of this signal to investors that you'll be wise with their money. Keep that in mind. Score yourself out of 5. Cost cutting during COVID. Communication. Have you been transparent in your communications? Have you kept it clear, regular communications with investors, staff, clients? Hey, here we are. This is what we're doing. We're concerned about your safety, telling your clients, telling your staff that we're going to be fine. We're not laying it off, whatever it is, and letting your investors know. Are you clear? Have you done clear, concise communications so that your clients, your staff, and investors aren't wondering what's happening? Business model. Has a business model. Do you have a business model that can generate revenue in the future, even if COVID conditions remain? What pivots have you done to your business model to make it more COVID resistant and post-COVID interesting? Got to have a COVID story. And unfortunately, that's the next point here. Appropriate investor narrative with a COVID and post-COVID narrative baked in. Remember to give yourself a score out of 5 for these. And I'm saying, this is what we did. This is how we were going during COVID. This is when that happened. This is how we reacted. This is what we did. And this is our plan going forward and what we're doing now and what we're doing post-COVID. And a lot of this in my other courses, when I'm talking about building a pitch deck and stuff, investors really want to understand your mental process, your mind map, as it were. They understand that startups pivot and what you're pitching right now might not be the long-term solution that you end out the door with, but they want to know that you're making decisions logically with data that comes from the community, that you're not irrational, that you're wise with your money, all of these things. And that's what you have to tell them. Hopefully that makes sense. Make sense so far? So let's talk about a business model. Do you have a unique selling proposition, business model, and pricing? This is your funding metrics 2. Metric 2. So how unique is your proposition really? What research have you done to back up the fact that you do things better or faster or cheaper? How are you communicating it to your audience? Do you have a clear, unique selling proposition that your customer readily recognizes? For example, would they be able to articulate what differentiates you clearly without your guidance? Example, we are Who Won Start a Pitch competition this past month in March was Marlowe, and they're about to launch a tampon delivery service, home subscription service, but for lubricated tampons to solve all these problems that women have. And every woman I've talked to, every woman the investors talk to, have a visceral response to this product. That they once they see it or hear about it, you could tell they have the Cookie Monster look, for lack of a better word. If you're taking my other stuff, you show Cookie Monster a cookie and his eyes bulge out. They may have been part of the Collision conference, but we run a monthly pitch competition, and they won that as well. I know Collision just happened, but it's amazing. And if you want, I can email that pitch out to you afterwards. We have it on our YouTube. But would your customers be able to clearly articulate what differentiates you from the competition without your guidance? Investors want to see what is it about your business model that shows you are on a path to monetization and there will be margins. Not only do you want to sell, but you want to be profitable. If you're looking at getting into some of these accelerators, I'll tell you a story, and you can do whatever you want to do with this. Incubator, I know in town. I know a couple years ago, a bunch of people applied. I know the person who applied first day, great startup, but their margins were about 15%. And I know a bunch of other startups who applied way later in the process who had 30, 40, 50% margins. They got approved almost right away. This other person did get approved, but only on the last day. And that was really the thing. It was the margin. So people want to know that you're going to be profitable, because when you're talking about low margins in investor, again, they're looking at that 10 times return, and it's not fictitious for VC and angel. It exists. So you have to show them that you are going to be not only monetized, but be profitable when you do. Can you demonstrate through data that your pricing is appropriate for your end user in the right geography? You can look at Netflix isn't the same price all over the world. Cell phone plans aren't the same price all over the world. If you have a global strategy, what's your pricing strategy? Is it the same? How do you plan on attacking different geographies, and why? Is your pricing strategy appropriate for your customer's geography and circumstance? And is that validated by concrete data? Concrete data could be, what your competition's doing, what the acceptable is in your market, or if you're getting a crap ton of sales, then your customers are obviously coming to you because you're solving a problem, even if you're higher. All right. Sticky. Do you have a sticky business model that encourages frictionless repeat payments? You probably all know this. Everyone loves subscription models because, so many people stop using the product or service and they keep the subscription for long afterwards. And it also allows for you to be able to project revenue out for a long period of time. So is it easy for people to buy? Is it frictionless and repeat payments? Don't forget to give yourself a number out of 5 on this. All right, metric number 3. What is your go-to-market strategy? So gone are the days, and I roll my eyes every time I hear this, when a startup gets on stage and does, if I only capture 1% of this market, because this is a huge market, and if I only capture 1%, we'll make this kind of revenue. Well, that's great. But if it's just a dream. People want to know how you're going to capture it, not if you're going to capture it. So what's your plan? Okay, I'm going to say this a bunch of times. TAM, SAM, and SOM. Do you know your TAM, SAM, and SOM? Do you understand these terms? And I'm going to go through them just briefly here, but do your own research. Investors really want to understand that you know these things and they understand them. So, do you know TAM is the total addressable market for your product? SAM is the serviceable available market, or the portion of the market you can acquire based on your model. And SOM is the serviceable obtainable market, or the percentage of SAM you can realistically capture. So you need to show a clear understanding of these terms, and you need to do a bottom-up approach to your marketing and know your beachhead, and we're going to talk about a beachhead in a minute. So basically, you need a clear understanding of your TAM, SAM, and SOM with a market size that is greater than $1 billion. We don't really want to go into this. You can email me if you have questions and stuff about TAM, SAM, and SOM, but You need to understand your market. People, when you're talking about to investors, they're always analyzing you. Investors can't generally invest in startups that do the same thing because it's a conflict of interest. So they're evaluating you to determine, are you the best team to understand with the right skill sets to go after this market than any other I'm going to see in 6 months. Because if not, then, if you're not the best, then get out the door. See ya. I'm going to invest in the best. Why would I invest in someone who's not? Because I only get one horse to ride on this one. So keep that in mind. So investors want to see clear customer profiles and a beachhead customer, clear customer segments and segment priority match with ideal customer profiles. They want to know who you're specifically going after and that you've identified and got some response at. Your beachhead is the key customer segment that you're going after because it will open up all the other segments. So what is your beachhead? Are you going after teenagers? Are you going after B2B here? Are you going after, what's your beachhead? And a clear idea of that avatar and all the stuff related to that customer. Marketing plan. A good marketing plan incorporating relevant channels with differentiating use of video and storytelling. And this is great. Everyone says marketing and social media and all that kind of stuff. But going back to that 1%. All right. So here's what I would ask you if you gave me that 1% quote. If we only get 1% markets, how are you going to get 1% of the market? I could say, okay, what's your conversion rate? If your conversion rate of people coming to your site is 3%, and you want to get 10 million customers, that means you need to drive 300 million customers to your website to get that. How are you going to do that? What's your SEO marketing plan to get those 300 million eyeballs? So, you can reverse engineer that discussion versus just saying 1%. Can your website handle that? How are you going to convert? How are you going to increase the conversion? How are you going to tweak those things? Have a plan. And based on that, give yourself a score out of 5. Sales plan. All right, sales and marketing are different, but what's your sales plan with systems, clear metrics, and optimized conversion tactics? The other thing to understand here is what's the life of the sales cycle. People often overlook that. A lot of people go into, for example, I used to work for a company that did software sales into the education industry. Schools and universities and school boards, the sales cycle is 18 to 24 to 36 months. So think about that. You're starting, and every prospect and lead you work on is not going to close for 2 years. You kind of need to know that going in so that you need to have the runway. You need to have all that stuff ready to go. Validated assumptions, realistic assumptions validated by data, meaning you talked about your market size, you talk about what's missing in the market, you talk about your unique sales plan, you're going out sales and marketing. How have you validated these assumptions? You've got this kind of ad response, you're paying this much pay-per-click, your growth on your newsletter is this, you got so many followers, we've got so many sales. What's your validated data validating the assumptions on your sales and marketing plan? What are they, what everyone else is doing in the industry, what your main competition is doing? So give yourself a 5 out of that. I've just got to keep reminding people that we're going through that sheet. Sales process and cycle. Sorry, I think I tipped my hand on this. Is it an easy or difficult sales process cycle, acceptable sales cycle? Because it's an easy process, it becomes 30 days, 60 days, 90 days. That's easy. Start getting longer than that, you're really going to have a money deficit over time, and you need to have a plan for that. And the longer that sales cycle, the more complex it is, the less investors are interested. So for that one, the easier it is, the shorter the time period, the closer to 5 it is. The harder the sales cycle, the longer it is, the closer to 0 it is. Traction. In the last 90 days, what kind of traction have you had? Press mentions, user growth, monthly recurring revenue, engagement statistics, pilots, keys, partnerships, letters of intent. A lot of people give out dots during these presentations, and you have to remember lines, not dots. And what that means is I'll get, we have 30,000 active, 30,000 downloads. Okay, well, what did you have yesterday? What did you have a week before? What did you have a week for that? What are you paying for each of those? Is it going up? Is it going down? Are you growing? If you had 30,000 now and you had 30,000 3 years ago, then, what's going on? That's a problem. So lines, not dots. If your revenue is, we had 6,000 revenue this month. Okay, well, what did you have last month? What about the month before? What's your year over year? Lines, not dots. Because a line, dot, on its own, is really hard to make any sense out of, if that makes we've gone up 50%. Well, what does that mean? You went from 1 user to 2 users, or is that 100%? Or did you so when you're talking about traction, and it's not just revenue, though revenue is probably the best form. Letter of intents, partnerships, pilots, press mentions, people signing up for your newsletter, social media growth, all these things are forms of attraction and proof that things are moving in the right direction. All right, next metric 4, competitive analysis and intellectual property. So basically, obviously, your competitive analysis and IP. So what makes you cheaper, better, faster than anyone else in your area? Can you clearly articulate why you are above the competition in terms of efficiency, pricing, time, IP? Have you filed for your IP stuff? People want to know, investors, that you know the market better than anyone else. So they also want to know that you own and securely house all your IP, including your source code, data, any sort of contractual obligations you have with third-party developers. Investors want to see great data hygiene and a good data room. So who owns your database and code? Do you have secured code and data in case vendor relationships go sour? Do you have passwords and the keys to everything? If you can patent something, have you filed for it? Do you have all the appropriate trademarks for your name in your industry? Are you protected? So don't forget to give yourself an out of 5 for this. Competition. A full understanding of the competitive landscape and your differentiation. Do you know the competition and the landscape better than anyone else? And understand that when you're talking about competition, it's usually one of those access slides, and you want to be up and to the right, which is great. But understanding that you can manipulate those accesses a little bit. So, it doesn't always have to be cost and what have you. It could be ease of use and fun or engaged or whatever. So keep those in mind depending on where you're differentiated. You need to know your differentiator. And if it's muddy, you give yourself a low score. If it's clear, give yourself a high score. Defensibility of your solution, IP protection, registered trademarks, and or credible strategy for barrier to entry or response to new threats. How defensible is your business? Can someone just come over and swamp you with a little bit of money, or are you creating barriers to entry for them that make it harder? What's happening here? How defensible is your startup? A genuine competitive advantage. What is your key differentiator? And it could be anything. It could be, the founders, could be you, could be you have a patented algorithm, B2B process that gives you the real-time trading data microseconds faster than anyone else. I don't know. I just made that up. So what's your clear advantage then more than anyone else? Maybe if you're talking with me, I work hands-on with thousands of startups in the Toronto ecosystem. So I can connect you, I can help, I know what succeeds and what works, specifically in this area. The startups that I don't think I can help too much, I will, that are better suited to work with someone else, I'll definitely suggest they go there or there or there. But my advantage, and when I'm training and teaching people, is anybody can do slides. But when we start asking questions and we drill down, and that's when the value happens. So my clear advantage, I've worked with thousands and thousands of different startups, help them launch and grow successfully. In that, having done that has given me incredible different perspective than anyone else on your business and what you're doing. So what's your clear advantage? Now, I could probably articulate that better, but that was just me ad-libbing ad hoc there. All right. Funding readiness metric 5, team, advisors, and investors. So it's all about people, people. Investors are people too. Investors usually can't invest in competing companies. So they're asking, is this the best team to tackle this problem that I'm likely to see in 6 months that I mentioned before? And, do you already have a lead investor? If you already have investors, that's kind of nice. So let's go into this. Starting with the management team. Are they confident? Are they articulate? Are they subject matter experts? Are they likable? Most, but not all, investors I talk to rate likability as very high on their criteria. I don't want to, basically there's a quote, I don't want to be invested and work with over the next 10 plus years founders I don't like. And ask any investor, one of the top things is they have to like the person. Because you're going to have those monthly calls and whatnot, and it's one of those things. You want to be looking forward to that. Now, it's not for everybody, but not every investor needs that. Some people are all about the numbers. But remember, investors are people too, and it's all about people. Strategic partners, suppliers, getting the best hiring, it's all about people. So good founder, co-founders. Do you have clear communication? Are they approachable? Are they coachable? Are they regarded as credible and thought leaders in their industry? And if not, start working on those things. Experience. Oops, wrong. The appropriate team with experience that translates to the opportunity at hand. I mean, I've seen a bunch of accountants go after legal stuff, or people have no industry, no food industry, try and launch food products. So you have to have an appropriate team with the experience that will be successful in this market and opportunity for the investors to be interested. So keep that in mind when you're pitching. If the team members or advisors or investors don't have the experience or aren't really helping your business in an active way that the investor finds interesting, you probably shouldn't have them on the slide. Holes. So investors will see the holes in your team. What you're missing, what you're going to have to succeed, all that kind of stuff. So they want to know, and you should address this outright. What is your plan to address and filling staffing holes? Are you going to outsource? Are you going to hire? What's your plan for that? And this is a great thing to mention because, this is part of why you're asking for funding. When we get funded, we're going to hire the marketing person that is got experience launching $1 million plus businesses in this industry to fill that hole. Great. Because now you kind of mentioned your need, you talk about your hole and why you're going to use the funds, and it all starts to make sense. So know those holes in your company because the investors will see them. Stock ownership. Have you figured out your attract and retain policy? What's your employee stock ownership plan? Is there one in place to ensure that talent sticks around? What happens when if you don't have this in early stage startups, you can't usually afford to pay premium dollars or keep the best talent unless you can dangle stock ownership in front of them. So is all that stuff in place so you can attract and retain the best talent and people just don't leave? Advisors. So strong, multifaceted, diverse, well-connected advisors with performance-based contracts. So how are the advisors and mentors relevant to the industry opportunity? Can they open doors, be a sounding board? They have the network or expertise to help you through key decisions. If you're selling a product or services to hotel industries, and one of your advisor owns, 4 chains of hotels, that's relevant industry. But so keep those types of things in mind. But your advisors should all be relevant. How are they actually helping you? And the investors need to see that. Do you have the support, trusted and experienced professional support from lawyers and accountants and other third parties that you may need? Like if you're not incorporated and don't have the right legal support, investors are going to be concerned that you're not that you're leaving yourself exposed to what other exposures might be out there. If you have professional accountants doing everything so that there's no hidden stuff, shenanigans going out there, or things aren't being done right. Do you have the professional support you're going to need to scale properly? So the next section is metric 6, financials and KPIs. I hope this is okay for everyone. I realize we're running a little late here, but we'll go faster. So what are the KPIs you are tracking, and what are you hitting them? You need to show in your slide deck that you are hitting your key milestones. LTV over CAC. Now this is so important. It's a super strong signal to people. This is your key metric. Do you have an healthy LTV to CAC ratio? Now that is industry standard or higher. So what is the lifetime value to customer acquisition costs? So the big ratio number people want to see is 3-to-1 or higher. So investors want to see that whatever you pay to acquire a customer, that you'll get 3 times back that in revenue or higher. If you have that, they'll see this as a money-making machine, and it's a very strong signal. If you're lower than that, it's a weak signal. So what's your LTV versus CAC? If it's 3-to-1 or higher, put yourself as a 5. If it's much lower than that, based on whatever, put yourself much lower. Or if you don't know, then you better figure it out. Clear identification of key assumptions validated by customer data. So you've all probably done the business canvas by now. What's your business plan? And any assumptions need to be validated by customer data, whether it's competitor research, whether you're going out and doing it yourself, whether it's sales, whatever it is, you need to validate all your key assumptions. And they're all there. So if you're pointing numbers at slides and you're saying we're going to hit here by this date and we're going to do this, people are going to say, how do you know that? How do you know we're going to hit here by the date? What assumptions are built into that number? And let's start talking about that. Validated revenue. Identified and validated revenue appropriate for investment needed. So we talked about margins. We talked about market size and return of investment. So are people buying your product or service already? That's validated revenue. Is there business already in this area doing similar things, and it's a validated need that's been identified? Do you have letters of intent, customer signups, that kind of stuff? What is your validated revenue? Burn rate. A reasonable burn rate, i.e. monthly expenditures. You're asking for money. Investors want to know, are you going to be frugal and wise with my money? So they always look at this. Your burn rate needs to be appropriate for your customer size, industry, the current COVID economy, and geography. Go back to some of the things I mentioned about COVID earlier. Did you renegotiate your contracts based on this? Are you using SEBA and CERB and doing all the grants and stuff wisely so that you can maximize, are using the Ontario Jobs Grant and the Digital Media Tax Credit and all the other stuff that could potentially extend your runway and give you much more marketing bang for your buck and that kind of stuff. So what's your burn rate and what's happening there compared to your company size and other people in the marketplace? The next metric is the ask and valuation. Keep in mind, the location of your investor for this, for a number of reasons. Having a realistic ask and valuation, given where your company is at, your company stage, and the investor appetite and location. You need to educate yourself on this. So what this means is, what are other startups doing? What are they valued at in specific locations where your investor is? Specifically, for example, U.S. valuations are famously higher than Canadian ones, as an example. So if you're talking to a U.S. investor, look at the local portfolios, what they've done, other companies in the area have done, what other competitors are doing. Take a look at Crunchbase. What are other companies valued at? What are they getting? What are their valuation? Understand this going in. Talk to, go to our investor speed dating, or take our one-on-one with Alex. Take a one-on-one with Alex and Morsing from Ecovesto, and talk about your valuation so you get it right. Because you don't want to be out of the game by wildly overvaluating yourself, and you also don't want to leave a bunch of money on the table because you're undervaluating yourself for investor marketplace. So educate yourself in this area and have a valuation that is suitable. Milestone-based trenches for investors. So, for example, you have identified key milestones that must be hit in order for investors to release the next round of funding, tranche 1, 2, 3, etc. Know your industry and what other startups are getting for each of their milestones. This also makes it a little bit more palatable for investors. Hey, we need $25K to get our product launched, and once it's launched, we need $50K to do this, and then once we do that, we need $100K for our marketing plan. And they'll say, okay, you hit your milestones, and we'll put those in a tranche and release the funds at the time. Because if you don't hit it, they now have an opportunity to not throw more money at it. So what are your milestones? And show that you've been tracking to your milestones for a while. Other investors. What are your letters of intent, agreements, or closed deals with other investors? Who are you talking to? Investors always want to know if there's another investor, they're more interested. The lead investors, the first investor is the hardest investor to get. If you have other investors, leverage them. So if you have investors that are investing in you already, leverage them. If you have letters of intent or agreements or later negotiation, give yourself a closer to a 4 or 5. If you don't have any of these things, give yourself a 0 or a 1. Due diligence. Due diligence documents, your data library, your data bank, your data room, documents completed and available on request, hopefully online. We did a whole webinar on this with some CPAs from Galleon CPA last year about all the documents you need to have ready for the due diligence, and make sure it's ready and online so you can share this kind of stuff. And if you don't know, then give yourself a low mark. If you know what you need and all the documents are ready, then give yourself a 5. Exit strategy. It's easy to forget that the only way investors get their money back is during a liquidity event. So the only way they get money back is if you sell. If you get sell more stock, people more buy, you go IPO. So you need to understand an exit strategy because investors will, in the end, want to get paid. So you need to have an understanding of acquisitions and IPOs in your industry, and you need to have thought this through. And when I say things like thought that through, when you look at your exit goals, building a company towards exit, aligning with operations, marketing team, and those potential acquirers. For example, if you're planning to sell to Microsoft, or Microsoft's one year versus Google, you may want to make sure you're building on Azure platform versus the Google platform. You need to be aware of the deals that are happening in your space and where the gaps are. So understand all those things and be able to talk to them. And you don't have to have a definitive plan. I've had different investors have different thoughts on this. Some say you should address this in your pitch deck. Some say you don't. My philosophy is that you need to be ready to talk about it. You don't mind mentioning it once in a while. Say, well, our 5-year plan is we could sell to Microsoft. We could do this. We could do that. You don't necessarily have to go in deep until the investor asks you. And then you got to be ready to show them that you've thought all of these things through. The ability to clearly communicate how and when and why the investor is likely to see a return on their investment. Do you have an ROI for your investor? Do you see where they're going to get their 10 times return on investment? You have to show them this. That's why they're investing in you, is to get their money back. It's easy to forget once you start a relationship and start talking to an investor that, you have to show that to them once in a while. Metric 9, team charisma, communication, engagement, and sociability. These are some of the must-have skills. Investors are people, and they want to be around likable, sociable, dynamic people. Are they engaging and social so you can always know what's happening? Can they lead a team, attract the best talent, and get more investors? Are the co-founders clear, engaging, and confident? Do they actively engage and are open communication not only with investors, but with suppliers, customers, and their clients? Relationships with people that can help founders in a crisis. Current and future clients, strategic partners, employees, advisors, media, etc. These all need to be part of your network. So look at the founders, look at the advisors. Do they have the network? Do you have the network to succeed? And is your network, would you rate it a 5 or would you rate it a 1 or a 0 against your competition in this area to grow? Storytelling. Do you have a good use of storytelling across the business? A lot of people roll their eyes at storytelling. Okay, so here's the thing. Investors talk to 100 plus startups for every one they invest in. You need to be memorable. You don't understand that I've just had 2 weeks of meeting startups, and I haven't invested in one. How am I going to remember you? People remember and engage with stories. Those who don't use storytelling get forgotten. What was that story? I don't know. Let's talk about this startup. So storytelling, you need to use it. Sorry, if you don't like it, I apologize, but it is. Okay, the last metric we're going to talk about, and then I'll stick around for questions. I know some of you probably have to leave. I'm sorry for taking so long. The last metric is social impact. Is becoming more and more relevant with your customers and investors. Investors want to feel good about the companies they are investing in. How can they do more than just make money? Are you being a force for change? Good, social responsibility. And what's your message to your customers? So let's talk about impact. Inclusive. Do you have inclusive hiring policies and plans for recruitment systems to back it? Especially with tech companies, we've all been, hear the horror stories about harassment and this and that and the other. We need to have plans going in to make sure that this kind of stuff doesn't happen. And a diverse staff and community and whatnot to grow takes a lot of that away. So having an inclusive plan really fits into what investors are looking for these days. So keep that in mind. Do you have a clear so what narrative? One of the favorite investor questions is, so what? Regarding what positive role their company is playing in the world. So, so you sell shoes. So what? So what's your so what narrative? What impact are you having in the world? What change are you having? What is your so what story? Values. Do you have a written out and clear set of social values by which you and the rest of your employees can make decisions? Having this kind of thing allows you to build a better culture and allows people to understand what it is you stand in and believe, both from a customer and employee point of view. And it allows you to succeed with much less friction. Culture. Do you have developed a culture of empathy and agility and internal and external communications? What's the culture of your company? Is it healthy or unhealthy? Is it ready for growth? Do you even have a culture? Do you know it exists? Give yourself a score out of that. So that in a nutshell is the scorecard. If you score above 215, then you are ready to talk to investors. You should be talking to me, coming to our investor speed dating, to start a pitch. I'm tweaking this, and I go much more into the scorecard and all the details around it in the upcoming funding course I'm doing. I'll send you all an email about it probably next month. But hopefully that was valuable. Do you have any questions? Put them in the Q&A. Hopefully you will, that was useful for you and that you like the scorecard. Again, I will update it, fix the calculation stuff and update the spread Google Sheet as well. So you'll just have to look at the same link in a couple hours. So hopefully that was useful. I know it's 1 o'clock now. I'm going to stick around just for a couple of minutes to see if anybody has any questions about, the scorecard or anything else. We've got lots of other stuff going on. I need to do more of this where I'm actually just going on teaching people rather than the interview stuff that I do. So I look forward to more and more of these sessions because I've got lots of templates and whatnot that, people really need to succeed. So I'm not seeing any questions yet, but I'll stick around for another minute. So hopefully that was useful. I see people are leaving. And I don't know if you noticed, but about halfway through was the same picture on most of the slides. Very helpful. Good. So use this, measure this, and the things you're weak in, that's what you need to strengthen. So keep that in mind. Follow me up in the email. Join us on Slack. Let me know how you're doing and where you need help. Great. Well, thanks, everyone. This sounds, the feedback has been great. I appreciate it. I have a great day and a great week, and hopefully we'll see you coming up. Don't forget, Razzle tomorrow. You can get a Tesla 3 for $20. Join us. Take care, everyone. Talk to you soon. Oh, hang on. This prez proved to be how unready I am to deal with everything. All right. Well, Justin, start joining our other events and come to our investor speed dating and networking event. Ask us stuff. Even if you're not talking to investors, hang out in the main room and talk to other startups and ask them stuff. So it's always a great networking time. Thanks again, everyone. We'll talk to you soon.